Hello traders and welcome to another video review. Today is Wednesday, April 19th, 2023. Let's take a look what's going on the Forex economic calendar today. Industrial production data from Japan beats the expectations of 4.5% with the actual reading of 4.6%, which is even better than the previous reading of -5.3%. So we will definitely take a look at the Japanese yen pairs to see how this influenced the markets. However, the importance of that event is only two yellow dots. CPI data and PPI input data are scheduled for release at 8 o'clock. Those data are from the Great Britain, and the CPI is expected to decrease from 10.4% to 9.8%. The same situation is being observed in the Eurozone. The core CPI and CPI data from the Eurozone are scheduled for release at 11 a.m. and the CPI is expected to drop drastically from 8.5% to 6.9%. Very interesting data today from the Eurozone. German 10-year bond auction scheduled for release 11:30, and then at 12:35 ECB Lane will give a speech as well. During the New York session we have the crude oil inventories as the main event of the day, scheduled for release at 4:30. But before that we got some data from Canada. RMPI and housing starts, both of them are scheduled for release 2:15. ECB Schabel will give a speech at 5 p.m. and then Bank of England MPC member Catherine Mann will give a speech at 6:30. At 8 p.m. Fed beige book is scheduled for release for all of you who wants to take a look a little bit deeper into the US fundamentals and Fed policies. So quite interesting day. Some data are very important today. The CPI data is definitely very important for the traders, and crude oil inventories are scheduled for release as well. So very nice kind of a day for the crude oil traders. But first, let's take a look at some pairs. We are going to start with euro, then British pound, then US dollar to the Japanese yen, and at the end we are going to take a look at the crude oil. So let's start with euro dollar. For our chart of the euro dollar, as you can see, is keeps going up. It goes up, pulls back, goes up, pulls back, goes up, pulls back, goes up to the new yearly high, pulls back. So the trend is obvious here. It's maybe not that dynamic, not that aggressive. Nevertheless, it seems to be quite clear where the euro is heading. Euro is heading higher. The weekly target is 61% of the Fibonacci retracement, so you need to figure it out on the weekly time frame, because on the 4-hour time frame we got the level of 1.10, which is of course the intraday technical resistance. One more level which is very interesting, because the market was rejected twice from this level, is 1.0983. so that's the intraday technical resistance, that's the technical resistance, and of course the swing high located at 1.1076. The intraday technical support is located at 1.0910, and as long as this level is not clearly violated, the outlook remains bullish. What do we have on the British pound? For our chart of the British pound, as you can see, with the data released, with the data being about to release, is positioning very into the very bullish figures. So let's take a look what's the Fibonacci retracement here, and to see what is going on. So let me just take a look here. Maybe something like this would be appropriate. There you go. We broke above the 50% of the Fibonacci retracement, and we are heading towards 61% of the Fibonacci retracement. This retracement is located around the level of 1.24 and 72. Of course, please take a look at this situation here. This is only for now. This is only ABC. This is only wave A. This is wave, let's say, B. Now we are waiting for the wave C to develop. And if you take a look closely on this, you can see clearly that this might be only a correction of the current move to the downside. Nevertheless, The momentum broke above the level of 50. Now it's 56 after this very nice spike to the upside. So the wave C might retrace even more territory of the previous wave, previous impulsive wave. So please be prepared for another rally to the upside. Nevertheless, 61% is still perfect target for the top of the wave C on the British pound. US dollar to the Japanese yen. What is going on here? Well, what do we have? We have a nice breakout. Yes, we have a nice breakout here at above the level of let me just take the magnet, above the level of 134.72. It's just a 3 pips breakout. It's still a breakout. The question is, will it sustain? Right now, the market is moving inside of the channel. Let's try to place a parallel channel here. Maybe something like this would be appropriate. Okay, do you agree? Maybe something like this would be appropriate. Let me just remove of the magnet again, and we are going higher, and we are going a little bit higher, and then you go a little bit higher. So that's the channel for now, and we are trading inside of this channel. Nevertheless, as you know, this channel, it looks pretty much corrective in nature. We got the pin bar candle here. Let me just zoom in. We got the pin bar candle here already on the 4-hour chart. We got the excuse me, we got the bearish engulfing pattern. Didn't retrace much, to be honest. This is just a controlled pullback towards basically last highs that will now provide the support. So the last highs were from the last swing highs, of course, 133.77 and 134.06. so that's the zone when we should expect some kind of a bounce occurred. Now we are waiting for the market to break to the upside and go to the upper channel line. The momentum is positive. The momentum just bounced to the upside. Nothing wrong here with this outlook, with this bullish outlook on the US dollar to the Japanese yen. And last but not least, let's take a look at the crude oil, because we will have the crude oil inventories data released today. So what do we have here? We got the local high, of course. We got the local high made roughly on 12th of April 2023. 83.52 per barrel of crude oil. So that's the outlook. That's the high. We might place some sort of the trend line here. I'm not quite sure how there you go, how it looks like, but I think this one is perfectly okay. Of course, we got this level here. This level is the judging by the lows, the level is will act as the technical support. Some $79 is the technical support for the bull. So if we make it just a little bit higher for you guys to see, you can see that we got engulfing pattern, pin bars. So definitely there is some kind of a pressure after this slight movement to the upside towards the extremely overbought market conditions. There is some pressure from the bears on the market. So they want to pressure the market even lower. The gap is still present here. The gap is between 75.71 and the lows of 79 basically, the dollars. Okay, so that's the gap. Let me just make the rectangle here, so you can see this is the bullish gap. Basically, that's supposed to be considered a bullish gap between those two levels. This is the beginning of the gap. There you go, we still have it. So that's the bullish gap, and as long as the market trades above this gap, the outlook remains bullish. Nevertheless, you need to know that it's very rare that the gap is not filled. So maybe with that momentum going towards the extremely oversold market conditions, we should see another test of the gap, and then of course the reversal and the movement towards the higher levels. So please keep an eye on the today's data from the crude oil inventories, US crude oil inventories. That might change the outlook for the crude oil in the short term. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.